What's up, Palantir community? Next week is earnings on Monday, but besides for that, we are going to have a very special Wall Street analyst on Twitter Spaces talking about Palantir. The Twitter Space is going to be Arnie's Twitter Space, Emil's Twitter Space, and Amit's Twitter Space. Now, you might have heard of Dan Ives. You might have seen Dan Ives. He's a huge bull for tech sector, the Magnificent Seven, right? Amazon, Google, Meta, Tesla, Nvidia, Apple, so on and so forth, the big seven. But he's also a huge bull of Palantir. You might have heard of him because he's the guy that is in charge of, or he's the guy that owns Wedbush. Wedbush is the analytics firm that came out with a massive $25 price target of Palantir. You see, last Friday, early morning, this report comes out. The price of Palantir shoots up from around $16 a share to around $18 a share, followed up with this last Monday and Tuesday where Palantir goes north of $20 a share. And right now, Palantir is trading, I believe, low $18 a share, if I'm not mistaken. This guy puts out this report. Arnie, Amit, and Emil do a Twitter space, which I'm going to show you the entire Twitter space is about an hour long. We talk about a lot of stuff. I was on the show as well, more than just this report. And on this Twitter space, they were analyzing the analytics report to say if it was justified or not justified, and where did the justification or where did the justification not come from? Like, where was the $25 a share price established? After that, there was a little bit of criticism and back and forth because, half of the community likes the report, half of the community don't like the report. The more analytics guys of the community don't like the report because they're like, there's no basis for it. And the people that are not as analytical are just like, listen, it moves the price, and perception means a lot when it comes to share price. And we were, obviously happy when the price goes up to $20. The problem is if Palantir doesn't deliver in earnings, well, the price of Palantir is going to shoot down. You see, it's like a double-edged sword. Short. I'm not even going to edit that. Double-edged sword. So in this critique or analytics of the analytical report, Dan Ives ends up blocking Arnie. And there's kind of like a little bit back and forth, like, oh, this is what happens when you ask questions. And Dan Ives unblocks Arnie and says, hey, I just don't want to get like a million messages. Why don't we do a Twitter space? Or Arnie asked him, why don't we do a Twitter space? And Dan Ives says, yeah, let's do a Twitter space after earnings. And he says, let's do it with Amit. I don't know if you guys know or not, but Dan Ives was supposed to be on Amit's show. There was rumors about it. I don't know if it was 100% confirmed. As you guys know, Amit's a buddy of mine. We talk a lot. He was supposed to be an Amit show. So maybe instead of being an Amit show, he's going to do a Twitter space with Arnie and Amit. And in my anticipation for this, he's going to be able to justify or back up what he wrote in the analytics report and giving a $25 price target to Palantir. In either case, this is absolutely fantastic because Dan Ives is probably the third largest personality when it comes to, mainstream medium. There's Cathie Wood, Ross Gerber, and then Dan Ives. So this is going to be really good for the Palantir community. Why? Eyes and ears, perception. Remember what I said, perception. When it comes to Palantir earnings, there's going to be earnings after the bell on Monday. I will be doing it live on Amit's channel. I will not be filming it on my channel because I want as many eyes as possible on one specific channel, and I don't want to, take the crowd away. It's going to be a fantastic earning. One way or the other. I am as nervous as all of you guys are because honestly, the price of Palantir ran up like crazy. And I'm super excited at the same time. I'm going to play you this 1 hour space. Besides for reviewing the analytics report, Emil, gives us some really good numbers of what numbers we would need to put up with the compound annual growth rate, free cash flow in order to justify a $25 price target, so on and so forth. I also go on the show and I was talking a little bit about Palantir's future and how Palantir rises from the military. The research and development of the military is what gives Palantir the Palantir effect. That's where Meta Constellation came from. That is where Palantir Edge came from, so on and so forth. It's a really cool Twitter space. There are subtitles on the Twitter space because I know I have a lot of international people watching my channel. I hope you guys enjoy this. And there's a wealth of knowledge. Everybody should listen to Arnie. He's super analytical, and he gives everybody a completely different point of view, a completely different thought when it comes to Palantir. Guys, enjoyed this video, but before I put it on, I just want to say I've been getting a lot of channel members. There's a link down below for channel members. I believe I got like 57 now. A lot of you guys have been asking me about an options video or questions about options. A lot of you guys are new. I will be making an options video probably this weekend. I'm going to be covering two things: the basics of options, what they are, theta decay, the Greeks, things like that, volatility, options calculator, how to calculate how much you're going to be making or approximately how much you're going to be making, as well as a covered call strategy to make residual income, or AKA a synthetic dividend yield for your stocks. If this is something that you like, please click on the link down below in the comments and become a channel member. I will literally be answering questions from the channel members that have been asking me, hey, Adam, can you do this? Can you do that? Can you make a video on that? And yes, yes, yes. The answer is yes, yes, yes. I love to get questions from channel members. I love to make specific videos for my channel members. And yes, I have a shit ton of content for my channel members, exclusive content that I don't put out for my regular channel, where I talk about a lot of things outside of, let's say, Palantir and SoFi. Thank you so much. Enjoy the rest of this video.
Hello, everyone. Here we are with Amit, who I'm giving the rights right now. And with Emir. Amit, you're on mute now.
Okay, can you hear me?
Yeah, perfectly.
Perfect, awesome.
We are here today to discuss the messy of AI, Mr. Palantir, who's becoming definitely a star, but every star that is born with some controversy around it. And I would say the controversy around Palantir right now are not related to the usual stuff. I would say about what's happening now in terms of institutionals that just a few months ago didn't want to touch Palantir at all. It was disgusting, SBC, and now it seems they found the love of their life. We have been following this journey from very close. Amit and I were among the fighters that try to share valuable insights when the opportunity was real. But now the price has popped, as basically everybody knows. And now it is getting attention from not only from retail, but also from the big guys of Wall Street. And among one of the most famous analysts on Wall Street, who just blocked me because I tried to basically make an analysis of his last report. So
But Dan blocked you?
Yes, I actually invited to the chat.
That's interesting, bro. These guys have thin skin. They definitely have some thin skin.
So, well, I would ask you, Amit, first, how are you? How are you living this change in perspective?
I'm doing good. I mean, so in terms of the Dan report, obviously, I liked the attention that the company has gotten from the report. I think that was really cool. I know I've been on record saying the timing of the report is really weird in terms of it coming right before earnings. But I saw what you wrote up today on Twitter. I've been talking to a bunch of people. I mean, I definitely do think the report itself from a valuation perspective is not as substantial or credible as it could be. I think the qualitative analysis of it wasn't horrible in terms of explaining AIP and Foundry and the ontology and stuff. A lot of it did feel like it was copy and pasted, like, you know, from their website, to be honest. But the valuation model, I guess, is the biggest concern all of us have. So we'll probably get into that more as we talk about it.
Well, I would share the same broad idea that it was not that the report was trash or wrong. I would say if you look at it as an equity report and not as a marketing document, you would see it definitely weak. Is not. I struggle to say that to be an equity research report. I can say that was how to sell Palantir as an AI company to investors that just want to hear those words, and to just find some little sentences here and there to sound as if you really studied the company while you haven't. That's the impression I had, but also why I wanted to go deeper. Personally, going through analyst reports was my favorite activity when I was an analyst, because by doing that, by trying to criticize and actually look what the analyst actually says that is strong and the sweet spot, you better have a sense of the reality. Basically, my way of testing the reality is trying to test absurd assumptions. If I can express why those numbers make sense or don't make sense, I think we can get one step closer to the truth. And here, the truth I saw was, as we mentioned, the report itself was not bad in terms of what expressed. I agree with the idea that Palantir is the Messi of AI. What I really struggle to see is how all of a sudden all the major concerns that were around Palantir are neither mentioned. And if I try to give a sense to the valuation, I struggle to give a sense to that valuation. So if you come out not only with a weird timing, as you mentioned, but also with a very strong price target. Remember, he published the article when the price was around 16, 17, implying a 50% return in 1 year. 50% is basically 2x the growth that Palantir is currently having, and 2x the growth that also he projects for the coming years. So in order to sustain that bold valuation, you need to make a lot of work. And the reality is that the valuation side was, okay, Palantir is worth $25 per share. Okay, great. And the exact sentence was, give me a second, please. Our $25 price target represents 10x our 2027 revenues estimate of 5 billion at our bull case scenario. So basically, you take the bull case scenario, you take the revenues estimated for the 2027, which is around 20% CAGR, and then you put a 10x multiple on that. You get a valuation, and this valuation is $25 per share. And I'm fine with that. I love when people have strong assumptions, strong ideas. What I really criticize is when you have strong assumptions, strong ideas, and you don't back them. Here, there is literally zero explanation on why such a multiple would make sense. Why 10x on 2027? Why not 5? Why not 20?
Yeah, I mean, I would. You can hear me, right? Yeah, you should be able to hear me.
Yep.
Yeah, I would agree with that. I mean, look, I think that the valuation thing was really weird, because if he had explained some level of justification for how the growth gets him to, I think, 5 billion in 2027, and then why they're using the 10x multiple versus, as you said, 5 or 15 or anything like that, I think it would be a bit more easier to understand the logic behind the report. I think the biggest problem I had with the report is there isn't a conclusive understanding of how they're planning to grow. Even as you said, the challenges they list are like competition. And it's like, well, what does that mean, right? If you're calling them the Messi of AI, do they actually have competition? And like, can you go a little bit more deeper on that? What is the competitive threat? The other thing about dilution, they're not taking that into account. I mean, there's so many weird idiosyncratic things about the report that didn't add up. And then on top of that, you put it out, not when it's $6 or $7. You're not recognizing the Messi of AI at that moment. You're scared to recognize it at that moment. You're recognizing it at 16. And so at $25 is a $62.5 billion market cap. This is a company that made $21 million in profit last quarter, and 17 out of that 21 million was from 3-month treasury bonds. So it's a little bit hard, especially if it's already up 200% on the year, to justify the valuation. But nonetheless, that goes back to my other conclusion, which is his clients want AI exposure. They don't want the big seven, and so he picks Palantir and he just does a ton of marketing around why Palantir is the method of AI versus like actual conclusive numbers.
Yes,
Just,
that's.
Can you hear me?
Hey, go Amir. Yeah.
Hey, I got a break from the baby. Okay, so just for reference, in general, what does a Wall Street equity report cost? To my understanding, it's something like $800 per page.
Really?
Is that the ballpark, Arnie?
Well, it's hard to put a number on that, but it's not insane to think that each report is worth literally thousands of dollars.
Bro, I sent that report
don't...
to hundreds of people for free. So.
Yeah, that's what I was going to tell you, that you probably shouldn't have done that. But I got the report, and as you guys mentioned, there are a couple of interesting things to talk about. Just for reference, Amit, what do you think the 25 price target means in terms of revenue in 2027 and free cash flow if you would make a reverse DCF? I made one today just for fun to see, okay, what does Palantir have to do to be worth $25 today in a reverse DCF? Would you like to take a guess?
I would imagine it's a little bit more than 5 billion in revenue. Correct?
A little bit more.
Let's not talk about $1 billion, but let's make it in terms of percentages, because right now we are at around $2 billion in revenues, and the Palantir is growing in the past around 30%, right now in the 15-20%. So, I mean, your guess. I can't answer because I already know the.
Probably close to
compounded until 2020.
Probably 37 to 38% year-over-year growth.
So they have to do compounded this year, next year, 25, 26 until 27. They have to compound the revenue growth at 50%.
Mm-hmm.
So 50% every year, and not only that, the free cash flow margin has to be 40% every year. So this means free cash flow of 5.8 billion in 2027, not revenue, free cash flow. And the billion has to be, the revenue has to be 14.5 billion in 2027. That's what that $25 price target implies. And that's using a 10% WACC, 22% tax rate, and 3% terminal growth. So, I mean, it's pure insanity just looking at it. And what's another thing that's interesting, using the just putting a 10x multiple on 2027 revenue, he lists a lot of comps, but none of them go out to 2027 with a projection, so you can have even a remote reference or anything. All the comps are 23 and 24 expected revenue. So it's completely crazy to me. I don't know what he charged for this. I don't know how you got this, Amit, but to my understanding, Wall Street equity reports are not cheap, and I would feel so scammed if I purchased this, if I was a client of Wedbush.
Let me, a little parenthesis. Equity reports are not generally sold on per report basis. They are generally internalized as a trading cost. What I mean with that is the bank has the traders that deal with asset managers who want to perform their orders. And often the traders, supported by the equity sales, push the idea to the portfolio manager. The portfolio manager is happy with the idea, purchase stock, make the execution with the broker, and the cost of the research is internalized in the fees of the execution of the order. So basically, you just need a marketing material to pitch the stock. Then now there is a new model emerging, basically research as a service that is taking place. But most of this research is basically given to clients in order to make portfolio managers execute the trade. And if I just can add a little color about this, the fact that he popped out just before the earnings, I agree with you, Amit, is very suspicious, because it's definitely a risk. It's like you are not covering the stock for 3 years and then you change opinion just before, so you have the compounded knowledge. This, to me, is a further clue that is more an attempt to capitalize on on the hype that is currently around the stock, to make the notice. Basically, he's an influencer on a professional influencer of traditional media. And let me say that imagine if you are an equity analyst. You need to write a report because your clients now suddenly woke up and now they want to have AI exposure in their portfolio. You are the equity analyst. What do? Do you write a report to say, don't buy Palantir because it is already priced at perfection? What do? You write an equity report that makes the case reasonably sound, with where you give some nice expectation for the future. 50% in 1 year is good enough to say, okay, let's take the effort. And you just collect some information to pitch the idea. So when you drop the report at peak interest, and voila, I think that's the setting that we are currently seeing. So he knew that by dropping the report exactly in this moment, he would have capitalized on the media effect. In fact, all the media reported, oh, Palantir massively of AI. The price moved, clients are happy, and it doesn't really matter the substance of a report. But since we are not here to pump the stock, but we are here to try to understand, okay, what's the reality behind the surface? I think it is truly important for us that we have deeply skin in the game. We are not here to say something, you have a 50% opportunity to capitalize on AI, but we don't invest our money. The people who are here now invest our money, I would say, a relevant part of their money, and we are not incentivized to say bullshit just because it makes fee. We are here because we trust the company, we see a big vision, and we want the company to execute to deserve that valuation, not being here hoping for things to improve and having a pump from outside.
Yeah, I agree with a lot of that. I think that, again, 50% year-over-year growth, as Amir is saying, for it to make sense, it's just going to be hard. I think that
with either 40% free cash flow margin, don't forget that.
Right, and 40% free cash flow. Yeah, look, and Amir, I'll let you go in a second. Either Dan, which I agree with you, he's probably not thinking this deep into it. Either Dan has done such a deep dive of AIP, better than all of us, that he's thinking, oh my God, this is actually going to grow 50% year over year. It's going to be insane. I don't think he's concluded that. So I'm more on the side of you, Arnie, that it's kind of an influencer opportunity. If they do that, then that's beyond our wildest expectations, and that would be kind of a Tesla-like story, that they actually grew that much. And even then, it's still hard to constrain the valuation given how many outstanding shares we have. So there's a lot that has to go right over the next couple of years for this to work out. Obviously, all of us are investing because we believe that it can go right, but to just throw out a number, obviously not the easiest to just be able to justify. Amir, go ahead.
I don't really have a lot to add. I'm surprised in general that this report, if you can call it that, garnered so much attention. I think that was the goal in and of itself. I mean, let's not be too enthusiastic by the Messi of AI being called that, because remember, he called C3 AI the LeBron of AI in 21, and we all know what a scummy scam company that is. So I'm not really sure. There's not a lot to dig for in this report, it's pretty generic. He has a product description, probably from a pitch deck from Palantir themselves. I mean, this doesn't really give me anything. Even the estimates don't seem too interesting to follow. I mean, they're generally in line with the Wall Street consensus from when I compare his estimates and the Wall Street consensus. I mean, there's not really a lot to extract from this report. I don't know why it got so much attention besides the interesting way to try to find the proper intrinsic value. What do you think, Arnie? What else is there to say about this report?
Well, I think this report made a lot of discussion. Well, the title is actually genius. I have to say that. The moment was perfectly timed. So maybe it is very hard to time the market, but someone can really time when to drop an equity report at the right time. I would say the importance of this report is not the report itself. It is the second order effect of this report. What I mean with that is we were, I can't say crying, but we were wondering last year why institutions can't really understand and are not interested into Palantir. And probably the reality is that unless if you studied it for 1 month, 2 months at least, probably less if you follow Amit daily, you can't really grasp Palantir in a reasonable amount of time that justifies the effort for a fund manager. You already have 20, 30 stocks on your watch list. In order to be interested in a company, you need to know, okay, I insert this company in a team that is hot. And I think this is the moment. The report itself is not quite strong, but it signals that institutional investors now finally are willing to discover the company. I think this is the big important message that we need to get. As we mentioned, the report itself, I didn't find it quite interesting. Just to recap very briefly for who connected or who doesn't know me, I dropped this tweet today sharing 7 reasons why this $25 per share on Palantir is a complete joke. And the first reason was the 25x multiple was dropped from the sky. There was no explanation, no reference on, okay, how this 25x revenue multiple relates to other software companies. The cool stuff about SaaS companies is that there are a lot of analytics around there. And if there are companies that have superior revenue growth or margins, typically they are associated with higher valuation. Look at Snowflake. Snowflake, we can judge, okay, is overvalued or not, but we need to recognize that it truly has a very good combination of revenue growth and free cash flow margin. That makes Snowflake in a position that deserves a multiple. Right now on Palantir, we have the expectation that things are going to improve. We don't have yet the hard reality for things to improve. So if you come out with a bold price and you don't justify it in any way, you just say, we choose 10x multiple on 2027 revenue, for me, that's a problem. There is no dilution. So if you consider that Palantir is actually a very dilutive company, and even if now the SBC impacts less than last year, now it is around 20% SBC on revenues, and we have a dilution that is in the range of 3-5%. That 3% compounds and erodes the valuation. So not considering the dilution at all means that you're giving a 3% compound more for free. Then the choice of the comparables. You have, okay, C3 AI that is potentially a comparable, but it has no growth, and apart from hype and the ticker, there is not much left. I really struggle to see why you should put Zoom as a comparable. The report was clearly an AI area because it was in around 20 pages. AI was mentioned 80 times, this without considering AAP. That was around other 20 times, but no problems were mentioned. So no NHS, no Titan, no war in Ukraine, and no why Palantir is not a consultancy, why not FD, what's IL6, SPACs completely disappeared. Basically, all the potentially things that could make dubs arising disappeared. All the potential risks potentially arising disappeared as well. The risks that were underscored were competition, acquisition integration. Palantir has not been doing M&A for 15 years or so. So question mark here. Execution, I would say, okay, tell me a company that has no execution problem or risk.
Yo, Arnie, if that report costs $800 a page, your Substack should be worth like $5 million. Like, that is insane. That's not equity reports cost.
Let me say that's exactly why I get mad when I see these people at the top of the food chain throwing these things that are clearly weak, but have a lot of influence, and potentially they can damage. I don't care about institutional investors. They're still paid for their job. But for retail people who don't really have the skills maybe to assess why a 20x revenues is not something that you could take easily. 25x revenues means that you need to have 25 years of revenues fully paid in free cash flow to get break even with 25 years of those revenues. So 25x revenues is not completely out of the world. I have to say that. We're not yet at the levels of 2021, where Palantir was trading at 50x, while Snowflake at 100x revenues. Those multiples were completely out of this world. Yet, when we talk about rich valuations and you sell this idea as if it is something easy, and more importantly, you don't back up those ideas, those strong assertions with any evidence on why you're not actually scamming people. There is where I have a problem, and I feel the urge to call out what's happening. And actually, I embrace when someone tells me, no, Arnie, you're wrong because of that.
You know what's really getting me excited though? There's no doubt that since the year shifted 2022 to 2023, there's been a lot of attention on Palantir. And we noticed the narrative shift early. Me and Arnie started tweeting about it, and it was really interesting to see how suddenly Carp is open to a lot more interviews. We're featured on Bloomberg, we're featured on all these media sites, and we had a slight uptick in analysts covering Palantir. But regardless, each quarter, people who always tune into the earnings, we know that there's 3-4 analysts calling to ask questions, even though there are 15 analysts covering Palantir currently. And well, if you can even count the best analyst, in my opinion, which is the Bank of America lady, which her microphone never even works to ask her question. Like, her internet never works. So, I mean, I'm curious to see this upcoming quarter and Q3 if we will start to see an inflow of a lot more banks wanting to ask questions, because there's a lot of coverage. We know that William Blair covers government really carefully. They put out report pieces quite frequently on the government side, and we know that we have some bulls, we have some bears, but no one asks questions on the earnings calls. They're always so short. So I'm really curious to see if we're going to see an uptick in participation during the actual calls, because as an investor, I'm sure everyone here is familiar with being really excited for the institutionals to ask questions to the management, those hard-hitting questions that actually allow us to understand the business more deeply. So really curious about that. And I think something like Wedbush coming out with this report, sparking all this interest, being covered on CNBC. I had it on just a few days ago. They're like covering it. I mean, I'm really curious to see, price target aside, like the outcome of this. And we already know that the narrative shift is in motion. Palantir is a lot more open to it. They're participating way more during different news sources. We have Carp writing ops in the New York Times. I mean, they're really trying. They're participating in podcasts all over YouTube. So I'm really curious to see what the outcome will be from all this hype. Like once everything settles down, if we will see a lot more interesting coverage, so we don't have to do all the digging by ourselves. Because I mean, all you have to do basically as an institution is just pay Arnie his $10. I mean, it's even free now. Palantir Bullets. He covers everything, like everything I ever thought of that I was ever curious about. It was on Palantir Bullets. So everyone that doesn't know, it's now free. Head over to Arnie's Substack. There's over 100 articles. I mean, some articles may be over a year old. Trust me, you want to read just to understand the thought process behind all these metrics, all these business ideas. And
it's actually so funny
just a
because
shout out to
I
Arnie there.
texted Arnie yesterday. I was like, "Yo, is there a clip of Carp saying we're on track to 4.5 billion in revenue by 2025?" Because I could have sworn I heard him say it in an interview in the past couple months. Maybe I'm hallucinating. We couldn't find the clip, but he sent me a Bullets article from Q2 2022 where Carp said in the earnings, which is I guess what I was thinking of, that we are on track to still do 4.5 billion in revenue by 2025, which would be 30% CAGR. So, I mean, going to your point, Amir, like the hype is there, the stock price action is definitely there, and the excitement is there, and like we're either going to be vindicated or we're going to be wrong on this concept of it is their market to capture. And that's not us saying it, that's Carp saying it, right? Take the whole market. And it's a question of if they're going to take the whole market. I don't think Q2 is a thesis breaker, but if somehow they actually prove that they can grow 40-50% year, like Tesla, the reason Tesla ran is because it showed that extraordinary growth. If they were growing 10, 15, 20% year over year, there's no way Tesla would be where it's at right now. And so it's always going to be a little overvalued, but if the growth is there to justify it, then it actually has a chance to be justified. Just like Snowflake. I mean, at the end of the day, you can't argue that their growth is there and their free cash flow is there.
I was thinking, right?
Well, I can, but I'm not gonna get into it.
True, you can, especially their stock-based comp. But yes, I mean, they're still growing at what plus 50% year over year, even though the company is, I agree, overvalued at 25 times price to sales. They have some growth baked in, whereas Palantir, like 16% is just, it's laughable. I mean, you cannot say we're taking the whole market and grow 16% year over year. And so all of our assumption is as investors, that's going to change. And the question is just now, when will it change? And we just have to be patient on that. Arnie, go ahead.
No, well, just to connect to what you just said, on the one side, it's quite funny because since we started investing in Palantir and we started seeing the slowdown of 2022, we kept thinking, oh, that will be the moment of real acceleration. But we didn't really figure out that could have been driven by a chat. a chat that triggered what's now, I would say, real hype. And just yesterday, I was thinking, do you know Wall Street, the movie where Gordon Gekko, at a certain point in front of a picture, says, there's an illusion that becomes a reality. And the closer it becomes a reality, the more everybody is greedy and wants it.
Yep.
This AI hype makes me think of that. The hype is real, but the fact that the hype is real gives actually the condition for the growth to actually kick in. Now,
Yeah, the stock might be sitting at $7 if the AI thing didn't happen, if ChatGPT didn't happen. And so it truly was the moment where everything changed.
I mean, it is possible that maybe Palantir was actually struggling because they knew that they have these very strong products, but if the market is not ready to absorb and consider that product actually to be cool, you're there not able to scale your business.
Yep.
Well, we know that they have a really peculiar go-to-market strategy, namely the acquire, expand, and scale, where they first initiate several demos for the clients, which are then in turn captured as links, active links in the dossier that either Square posted. But if you look at that, you see that we don't really see an acceleration in the active links, but we see a huge spike in just at the end of 2022. So if those pilots start to enter the expand phase, I'm really curious when that actually kicks in. Arnie, do you have some details when, like how long the cycle is expected to be until they're actually a paying client? Because you can't count the demos or pilots as clients, because Palantir only counts paying clients. And to my understanding, the pilots actually, they are at a loss when they offer those. So do you know how long the cycle is? Because when that Q4 2022, like all those active links kick in and turn to the expand phase, I think that will be the first leg of a potential S curve. What do you think, Arnie? Do you have any details on that?
Well,
like the average time, are we talking 9 months?
We are definitely talking about months, but what we have been seeing since Palantir initially listed, and what we are seeing right now is that the time to deploy is actually getting faster. And there were some details in the last demos that were shared. I even shared them on Twitter, that the guy said, if we don't deliver some value in, let's say, 2 months, there's a problem. So the timelines are definitely shortening. The numbers of active links varies quarter to quarter, but is strong. The biggest problem I have, to be frank, is that we're talking about revenues to accelerate. But the big problem is Palantir can potentially grow the business without growing the revenues. What I mean with that is Carp right now could be in the position to say, since we want to take the entire market, we don't care about maximizing the revenues from each client. We just care our clients get fully on board on Palantir. If you make the numerical assessment of these assertions, basically this implies you maximize cost to deploy software, you minimize the revenues, and you maximize the number of customers you get on board, so again, further cost. They also said the company will stay GAAP profitable, so they will not do it in a degenerate way. They need to keep the profitability somehow, at least on GAAP on paper. But that means that, in my opinion, what we will see is revenues not skyrocketing unless there are some huge contracts on the government. Because on the government, maybe you can dump in the initial phases, like Palantir did in the very origins with the army or with the NHS, where there's an urgency, you just drop the platform and then you say, okay, you solve the problem, then you pay me. But for instance, with the DoD, right now, Palantir can't really say, I give you the software for free. That's they just can't do that. So on the commercial side, there's a lot of flexibility. So if we want to look at it from a bearish point of view, we should not exclude the fact that maybe we will just see the number of clients exploding, the revenues not exploding yet on the commercial side, because the incentive, if you consider the condition, we take the whole market. That to me means we don't care of maximizing the prices to maximize our margins. We just need to get into. Is it insane to say that?
Well, I'm really curious about those statements that Corp has made in regards to AIP, because we don't know how it will play out, but just looking at the metrics, we know that they have run into a sort of wall. We know that even though the customer count has been increasing, we also know that the pace of how fast they acquire customers has been de-accelerating since 2021 Q3. So sure, we might be up to 391 customers, but we only grew customer count by 6.5%. I mean, compare that to previous quarters where in 21 Q3 it was at 20%, and it's de-accelerated every quarter since then. So we know that they have hit a wall in terms of customer acquisition. So I mean, is it a desperate way to tie clients, or is there actually some sort of business idea behind this? Because we don't really know. We can only speculate, and something tells me that AIP will assist a lot, but I think more than that, I think all these, I mean, going back to the narrative shift at the end of Q4 2022, where they started to do more Foundry cons, now AIP con, they started having more advocates of their software, like CEOs. They started doing more public appearances. I think that will churn more customers rather than this. I don't know really what it implies. What are your guys' thoughts on this whole idea of we're gonna take the whole market, we will figure out the pricing later? I really hope that Q3 will give us some clarity into that, because it's really hard to try to speculate and model something as vague as that. But we do know that they actually have a big problem in terms of customer acquisition. So even though the company is in a way better position today than it was in 2021, we also know that they're growing way less. So what are your guys' thoughts and your speculations moving into trying to clarify what Alex Corp meant?
Grogu, if you want to answer that, I believe you should be able to speak now.
Yes.
Hey guys, how you guys doing?
Hey, Grogu.
Let me know if it's too loud. I'm kind of outside watching the gym right now, so if you hear a lot of wind, I'll try to step back and there was no wind. But yeah, in terms of what Amir just said regarding the client growth, I'm just going to keep it short. I think the client growth is going to be based on how we attack each sector. So you got your healthcare sector, you get one company as an example.
You cut out.
And they prove, oh yeah, let me just repeat that again. So as they enter each sector and they prove themselves within the sector, the companies that are within that sector will start to pile on. So I think we should be kind of focusing on what sector they're attacking, because we know government's kind of like overdone. We already know this. Healthcare is something they're really, really big on. Where are they going next? And I think companies going that way, because you can't have them like taking over in health and then someone from like banking goes, okay, you did this in health, what can you do for us? They have to prove themselves in each sector. And they're doing that by attacking client at the top part. So they grab the biggest clients, prove themselves with the biggest amount of data, and they kind of work their way down. Similar to what maybe Snowflake does, but they do it across all boards. But these guys are trying to attack each sector, which is why that pie chart that EtherSquare showed about how they're, I think it was like, was it 3 or 11% of healthcare? That's their business right now. Just to confirm. Do you guys remember?
Mm-hmm.
I think it's 11.
11. Okay, so like I said, remember when Shyam said that they're trying to get, they're the biggest startup in health. So they're proving themselves in the healthcare sector. That's why they're going for the biggest clients. So they will do that going down each sector, and eventually they will be kind of embedded in each. But they can't use a model that's in healthcare and push it over to banking because they're two different data infrastructure models that are used for two different sectors. That's what I'm thinking. Right now, I'm also trying to talk to Royal Bank in Canada right now to see what they're doing. And the conversation I had with them just like last week, because I told them I'll work for them just to check out how Foundry works. I don't know if they're giving me the job. But me going into that banking sector, I'll be able to find out what they're actually doing with Royal Bank. Because right now, I don't know, but I want to know. So I can probably give you guys an update in a week or two about that. But from what I've heard, they haven't really embedded into Royal Bank yet. They're just starting to. So employees are not fully familiar with their software yet, but they do know about Foundry. And that's just some, at the front desk, they know about it. So I'm guessing it has been introduced already. But that's my take. I'll let you guys talk and I'll listen.
I mean, everything you just said makes sense. We know that what you just described, which is the network effects, is the way to expand that they've chosen. And it goes back to the core fundamental goal of being the operating system of different industries, where they start at the top of business within each sector and then it trickles down. We've seen that with Airbus. We're starting to see it in oil and gas, and we're starting to see that in healthcare. We know that that's always been the goal, and it's also written as the whole mission in the SEC filings. But it's been the goal since the start, and we haven't really seen the whole acceleration from that, even though we understand that it takes time to penetrate. And that's why I think that rather than AIP solely pushing all of that customer growth and this AI hype being behind that, I think a bigger thing to look out for is the narrative shift, where they actually start to have all these C-suite executives being advocates for the software in public, taking part in cons and stuff like that. I think that will do a lot more for the company rather than just short-lived, not short-lived, but recent AI hype. So that's more in line with my question, and the actual saying that, okay, well, we're going to push AIP out there. We will figure out the economics behind it later. So it doesn't really answer the question I had, but it's good to clarify what their actually strategy is in terms of growth and how they target different industries. So you're correct in that, but it doesn't really answer the question what CARP actually means with those AIP statements.
Okay, guys, let's speculate a little bit since we have been serious up to now. What do you think will happen in terms of CARP mentioning some direction? Because as we said before, the last time CARP explicitly said something about a number for revenues was exactly 1 year ago. Apart from that, we just have clues about we get so much demand now in a month than what we got last year in a year. The demand is unprecedented, so strong claims. So my question for you is, do you think CARP will reiterate some guidance somehow, or just give qualitative aspects?
What do you hope for?
Amir, go ahead. You got it.
No, actually, I've been keeping track ever since he said that, and ever since the stock started to run, we haven't actually seen analysts re-rate their expectations. So I think even without going out on a limb and being like, yeah, we're gonna do all this crazy growth, I think even if they just stay online and beat their current expectations, I still think the stock might do well because analysts aren't really re-rating in accordance to this new hype. So I don't really know what I'm hoping he does. I hope as an investor that he gives us some clarity so we know what to expect, or just even if he reiterates, well, we're still on track for our long-term goal, which he mentioned exactly 1 year ago was 4.5 billion in 2025. I would be really happy if he does that because that means a CAGR of roughly 30%, 31%, which they've been saying since they went public. They said we're gonna grow 30% per year. Some years, obviously, as we're experiencing now, haven't been 30%. But if he reaches that, then yes, it will have compounded at 30%. But honestly, I'm not really sure what I hope for. I'm kind of scared if they give out some crazy estimates. We might
Emir, I know you love games. So if you were Carp right now, how would you play it to maximize your position?
I would downplay it. I would still stand back.
Why?
Because the street isn't really expecting a lot from you, and you're getting all this appreciation for it. So
you
really
would keep playing a low level game and making the results emerge in a few quarters, and boom, okay, now we are taking the word. Or you would be more on the C3 AI side, where they definitely oversell what they're doing because, oh, we are generative AI here and there, generative AI for everything, for you eating your sandwich. But at the end of the day, they had no customer count, no revenue growth. So it seems same topic. We are talking about enterprise AI and for government, but it's like the nemesis. One tries to oversell, the other tends to downplay.
Well, tends to downplay and has been in line with the downplay so far. But no, I really think they should be careful. I think they felt really punished going out so strongly early on since their DPO. And I think Carp is playing to the tune of Wall Street a lot more lately, and he knows how to play that game. So I think and I hope they will still sandbag, but I'm curious to see what Amit thinks.
You know what needs to happen, bro? This is what needs to happen. They need to start the earnings call. It should be Sham, David Glazer, and Carp. And then they switch the camera to the door. The door opens, and Peter fucking Thiel walks in, sits down right near the mic, and just starts answering every single question and just blows everybody away. No, I'm just kidding.
All three of them?
That would be kind of crazy, though, right? If Thiel, because, bro, I've been looking for what Thiel has not said a single thing about Palantir, I think, since 2017, like publicly on the record. It just hasn't been said. And I don't know if the guy, he hasn't sold any shares since 2021 either. I think he still has like 42 million shares or something. I don't know if he just doesn't care anymore. And he's like, Carp, this is your ship. You do what you got to do. Or if he deeply still feels, you know, there's massive growth opportunities. There's the founders fund is involved, government stuff, all this stuff. I don't know, but we haven't heard anything from him. I feel like that would be the perfect curveball. In terms of actually answering your question, I think I agree with Arnie. They need to sandbag. They need to keep sandbagging because the street already doesn't like them. If the street's expecting 40% year-over-year growth or some insane customer count and we can't deliver because of XYZ reason, I'd rather we, under promise and over deliver.
No, Arnie, give us your thoughts.
No, I'm basically in line with what you said, but that's also in line with what I previously mentioned, that also in terms of competition is better if you're taking market share while your competitors see you are having normal growth. Because if you start having like 50, 70% growth, obviously now I'm exaggerating, but if the value Palantir is able to unlock to clients is actually as big as we are seeing, the pricing power Palantir has is very high. all that pricing power implicitly means that potentially Palantir could rise prices every year, and clients should say, okay, we have no other alternative. But
Arnie, what also makes sense about that is CARP has been saying the same thing for the past 2 years, and it's kind of like we all believe it, but the street definitely doesn't believe it. And the quote is some variation of, we are solving problems for clients 5 years before they need to solve those problems. And I know he's always said that, and it sounds super cool and exciting. When the Novartis CEO went on CNBC and said 5 years ago, we did a data thing with Palantir and we created our I think, Data 42, whatever it's called. And now we can accelerate drug discovery because our data is already structured in the ontology and AIP makes more sense. That's when it really clicked in my head. So
5 years, literally 5 years.
Yeah, 5 years ago. If CARP's actually correct that they've been partnering for the past couple of years, even if it's not 5 years ago, 2-3 years ago, and really helping organizations structure their data, which is the whole point of that Sean podcast that he recently just did, AIP should be the easiest upsell in the world, which is a little bit of credibility to Dan when he's talking to all these CIOs saying that Palantir is the first call, the first reference point they go when they're thinking of enterprise AI spend. If that's the case, and if CARP is right about this whole idea of working with clients for years to solve problems they're going to have in the future, and now in 2024, 25, 26, 27 is when they're actually solving those problems, that should accelerate customer count and revenue growth beyond our wildest expectations. It's just the question of, if they can deliver.
So the big question: 5 years
for what? For to see growth?
to actually see that, yes.
Well, no, because I think now is the time. Well, I would say not 5 years. I think in the next 2 years, someone's going to win enterprise AI in the next couple of years. And when I mean win, I don't mean the whole market, but like it's going to be obvious who's like getting all the deals, right? Mm-hmm. Unless we're that in the infancy and it takes the next 5-7 years for it to play out, which it might. But no, I would say in the next like 8 quarters, if we don't see the kind of 29 to 35% revenue growth, there's going to be some issues, but hopefully it doesn't take that long.
Yeah, actually, it seems the war has just started. Just speculation for the last second. But do you think we will see CARP as aggressive as in the last earnings call, or it will be a more relaxed CARP? Because last earnings call, he was very aggressive, not only for what he said. We take the whole market. We don't have pricing strategy. But he definitely interrupted the other guys a lot.
It depends on the numbers. Because remember Q4 when Jay got to ask him a question and they did that like pink Barbie room, whatever room they were in. He was because they had reported 41% year-over-year growth. So he was super adamant. And he was walking around. He was wearing a blazer, all that shit. And then Q2 2022 in August, he's like stuttering saying, we're not going to be profitable till 2025. And it's like, I think the numbers ultimately determine his confidence. And
the jacket.
And the jacket, correct.
I'm looking at, hey, Adam, I see your hands is up. You can speak.
Yeah. What's up, guys? Can you hear me okay?
Yeah.
Yeah.
Yeah. I just want to add really fast to this 5 years ahead. And, we started digging into it a little bit with Amit. All of the commercial, not all, a lot of the commercial use cases and applications all stem from military use case and applications. And pretty much all the research and development that other companies have to do, Palantir is doing on the battlefield, paid for essentially by the military, by our government, future governments. Right now, they're developing 5 years ahead in Ukraine. This is exactly why they're in Ukraine. Make no mistake about it. So by the time Snowflake and Datadog and all these companies come up with their actual LLMs that can maybe mimic Palantir is already going to be doing the next product, so on and so forth. Literally, Meta Constellation and Palantir Edge all came from the military for complaints. Like the military was complaining about something, like critiquing Palantir. I showed it to Amit. We were both shocked. And this is like from a legitimate military document. Not me making this up, not you. And Palantir came out with Meta Constellation. Palantir came out with Palantir Edge. So they're coming out with software products and sub-products because of critiques on their existing software today 4 or 5 years ahead. So I believe that's what CARP means by that. I just want to add to that,
Absolutely. And the peculiar structure is that while last year, when the stock was dropping, people were starting thinking, oh, we should split the company. The reality is that it is exactly this combination of being in both sections that allows Palantir to transfer the knowledge that they develop directly working with the clients, for instance, with Novartis, and then transfer that knowledge to the center of disease on the government side. And inverse, as you just said, you develop meta constellation on the battlefield because you need your soldiers to know where the enemy is, where to strike, how to get home alive. And you deploy that tech for the commercial uses.
Arnie, in 2012, the report that was, there was a hidden report that the Army hid. This is when Palantir sued the Army in 2016. Again, this is not me making this up. I don't have a tinfoil hat on. This is a fact. I can show you guys the report. And one of the biggest criticisms of Palantir was their maps don't integrate as good as Google Maps, for example, Google Earth, and they wish they had something. Well, how did they fix that? That's where Meta Constellation came from. So they have better.
2016.
What was the question?
2016.
2016 is when Palantir sued the U.S. military for what's that word? Not procreation. When they basically Palantir sued because there's an act that says that if the military, it's called
It's
COT, I believe.
the non-meritocratic procurement.
There you go. Yeah. So basically, in 2016, Palantir sued the U.S. government because they're saying, "Hey, you're not doing off-the-shelf procurement. You guys are trying to build something internally, and we have a better product at a better price that's going to cost millions instead of billions." It went in front of the judge. The judge ruled not that you have to use Palantir, but the judge said you unfairly did not look to the private sector, and there is a law, the U.S. law, that says that you need to look in the private sector if there is something available. Judge gave them the ruling. Army came back, and all of a sudden the report that was literally hidden, it was classified report in 2012. In April, they came out with a report that basically gave Palantir 97% approval rating. They deleted it. One of the generals came out, and there's an email thread where he says, burn this report, it doesn't exist. And then in May, they made a new report that was completely skewed against Palantir. In 2016, all of this came out in the courts, and the original report came out, and they're like, hold on a second. The original report says that Palantir is fantastic. All the surgeons love it. Everybody loves Palantir. This is, again, not me making this up. This is an official report from the military. I have it. I'll share it with you, Arnie. And in that report, one of the criticisms was the mapping. And that's, I believe, where Meta Constellation came from. They took the criticism and says, hey, how can we make our maps better? How can we not use Google Earth and make something better than Google Earth, for example? And yeah, they sued in 2016. That's how they got that massive contract from the Army, like 860 million. Remember, there was a huge contract from the Army?
Yes.
That's where it came from, and the rest is history. That's how they got in to work with the primes, because Raytheon, IBM, Lockheed Martin, and General Dynamic, I think they're called. They're also like a prime or a subprime. They were all helping the Army build an internal system. And they didn't want Palantir to come in. That's why they were hiding the report, because they're like, no, we don't want Palantir here, because they're like, they literally said Palantir is not up to the task in the new report. That's the quote, Arnie. That's the quote. And then it came out that there was a huge cover up, that they were trying to make sure Palantir is not getting the contract. It turns out that Palantir was not subpar. They actually excelled in everything the military was looking for, and that's how they became a software prime, because now they can work with the military. But in 2016 and before, nobody wanted to work with them. The only people that were vouching for them was the CIA director and one of the other three-letter agencies, because they had in Operation Enduring Freedom, they were looking for IEDs, and they were saving a lot of lives. So actually, military personnel was telling the Army, why are we not using Palantir software? It's much better than what we're using right now. Why are we building a new software internally when it sucks? It doesn't actually work. And that's how Palantir got in, because soldiers were literally saying, we love Palantir. It saves lives. We want to use Palantir because it's better than what we have. and the rest is history. They sued, they won, and that's the only reason why we have all these contracts with the government, because we sued and they're like, no, Palantir's the shit. But before that, they were not letting us work. That's why Palantir started this Fed Go thing.
Well, from what I see, is basically by suing the government and winning, we can say Palantir legalized its influence there, but definitely got a seal of approval, and now it's very hard to make it away.
Yeah,
Thank you so much for all these overview.
Yeah,
like,
Arnie, you know who it is? You remember when you were watching the Reagan Institute, and there's like a general, she's a woman, and she was moderating. Do you remember Karp was sitting with some general that's a woman? She's in charge of like Southern Command.
Okay, yes.
That's her. She was in charge of the original report in April of 2012. She was the general. And she was the one, they asked her to cover that shit. She wasn't the one covering it up. She was just in charge of actually doing the report. That's how come she has a good rapport with Palantir. And in 2012, it was a different military. It's not this bullshit woke crap that we have today. It was legitimate.
Guys, I have to say, I'm really proud of the quality of the research that this community is able to generate, not only from the financial standpoint, but from also
Adam,
these...
mute yourself, bro. You got some shit.
I was saying that the quality of research on not only the financials, not only the stock, but to understand what's behind the business. Because I just read yesterday, and with these couple of sentences, I think we're going to close the stream. We know Warren Buffett as an investor who buys great companies cheaply. What people don't really understand is that he doesn't pass his days on Excel looking, oh, should I make a multiple valuation on this company? Should I use a WACC of 6% or 7%? That's not how he does it. He does it by looking at all the qualitative things that nobody looks at, but that have relevance, that tell you information that connected with the big picture, give you a profound sense of what are the strengths and the weaknesses of the company. And as an experience, I can tell you that when you write an equity report as an analyst, you don't really have the time, the patience, and the incentive to actually make that work. But that work that we try to do as a community, all of us with our little expertise putting on the ground, is what truly makes the difference, in my opinion. So we are still at the beginning of this journey. We are having a victory lap now because we saw the stock basically dying and now emerging as a phoenix. So not only thank you, everyone, but a big shout out to all the people around this community who are also here in this chat. Thank you, Adam. Thank you, Amit. Thank you, Chad. Thank you, Grog. Thank you, Edward. Thank you, Enrique. Thank you, everyone who's with us basically every day. Amit, do you want to say something?
No, that's pretty much it for me. Yeah, this is awesome. We should probably do these like every week or something. It's a cool little check-in for the entire community. But yeah, I agree. I mean, Q2 is going to be really exciting. Hopefully we get some numbers that we can live up to. I'm not expecting the best numbers because even selling SaaS products in Q2 is just not the easiest, right? Usually Q3, Q4 is when that stuff picks up. So, I mean, hopefully it's okay. I think we might beat the revenue from 530 to 550. That would be nice. And then I know we're going to be GAAP profitable. The question is just the customer count. And then I guess if they can increase their guidance, up from 16% to even 21% year-over-year growth, the street's going to like it. But the stock's up nicely this year, so they're going to have to perform really well to keep the valuation where it is, and we'll see what happens.
Well, stock down, stock up. The important thing is that we are enjoying the journey. And I think
that is true.
This,
we're getting philosophical now, huh, Arnie? That's what we got to do.
Very deeply inside, I'm also philosophical behind the numerical aspect.
No, but it is kind of crazy, right? All of us, like, I've never met Arnie, never met Chad, never met Grogu, I never met Enrique, but like all of us like kind of, it's like we all know each other, right? Even though we don't ever have physically met each other. And it's just insane that our interest for this one topic on the internet got all of us together talking every single day. And I feel like I actually have friends now, you know, like that. It's just insane. It's really cool.
Absolutely. I mean, now it's absurd to say because definitely we are not soldiers, but the feeling I have is this winter we literally fight together with the trenches against all the bears, all the trolls. Like the amount of hate that I received that I'm sure we all received every time we posted that, hey, what's happening right now makes no sense. Like, if you have the background of knowledge that we are trying to accumulate over time, it is clear, it's crystal clear that we are seeing much more value than what is perceived. But the trolls every day were, oh, but SBC, oh, but no profit, will never become profitable, and boom.
Well, yeah,
one after one.
Two things. I think that I don't think this is going to be a Tesla-like return, but this community feels like Tesla because for years they had to deal with all this nonsense, and eventually they ended up being correct. But that's only because of the collective crowdsourced intelligence that they had. And I don't think there's any stock on the market that has the level of collective crowdsourcing of intelligence from all these different sectors of perspectives that we have, other than Palantir. And second of all, for the story to be fun, there's got to be a villain. Right? Like, it's not fun if the Bear Cave doesn't come out and doesn't call them an AI imposter. It's fun when, you know, people say stupid shit and we get to fucking answer them, because they might be right, by the way. They might have a chance of being right. And so that's the risk of not only the investment could go to zero, but the journey of putting our basically reputations on the line, arguing for this thing that we all believe in. And we'll see what happens over the next 10 years.
Well, to conclude this chat, I would underscore exactly what you said. In order to be confident in knowing that when the Bear Cave pops out of the cave and tries to attack, and you know that those accusations are actually very weak, not because we have the presumption of, oh, trash report, but because we are torturing ourselves for more than 1 year, 2 years with those questions. Is Palantir actually a crappy consultancy, or there is something more? Is Palantir an AI imposter, or there is something more? This allowed us to say, okay, thanks for the reading, but I know that what you're saying has no substance. Now, the market can react however it can, but if we make our journey, we make our mental torture, every time there's a problem, we try to connect our brains and we make this value emerge, I think we can, we can't have a direct impact on the company as in terms of Tesla, where it's a consumer brand. But in terms of shareholder base, I think the journey is not only fun, but is also very helpful for us, but more importantly for all the community members. So thank you, Amit, for having shared this hour with us. Guys, you can meet Amit. You can meet Amit basically everywhere, but the channels that I see you most active are on Twitter, we're here, and more importantly on YouTube. And don't forget also to subscribe to Palantir Daily, newsletter that he shares. Can I say every day?
And now every Palantir bullets cost $800 an article. So if you guys want that, you better pay up. Dan Ives, bro, 800 page? That's insane. That's crazy. It's just crazy.
No, well, the numbers on finance are insane. And imagine that was available almost for free, and that was a 2x opportunity that I explained literally with 100 articles.
Yeah, if you guys wanted to, just DM me your email and I'll send it to you illegally. And hopefully I don't get, he retweeted the first page of the article when I tweeted it. So hopefully he doesn't care too much.
No, but well, the first page is fine. But for instance, in the tweet, I didn't put the pictures for that reason.
Gotcha. Okay.
I mean, we commented the points. That's fine. So don't worry about it.
Yep.
Thank you,
all right,
guys.
everybody. Thanks for joining.
Bye bye. Ciao ciao.